Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we had finished the few topics so far. Like we had discussed the banking awareness, or we can say let it write down here. We had discussed the banking awareness introduction part, okay, like in which we had discussed about the importance and all. Second, we had covered the banking history, okay. Third, we had covered the banking evolution, okay. Fourth, we had covered the Banking Regulation Act 1949, okay. Fifth, we had covered the types of banks, right? Sixth, we had covered the banking reforms and mergers in the latest lectures, okay. So these are the topics we had covered so far under the series of banking awareness under the part of financial knowledge, okay. So I hope that you have seen these lectures, you have revised them well, so that you will be able to give the answers asked from these sections in your examination. All right. So basically in this lecture, we are going to start with another topic of this series, okay. So this topic we had already discussed in the part of key national institutions. Okay. And again, we are going to revise them. All right. So what was the topic? That is the topic which we are going to start. The topic name is the Securities and Exchange Board of India, known as SEBI. Okay. So basically, if we talk about it, all right, if we talk about the SEBI, then if I'm asking you about the establishment year, then can you please tell me in which year the SEBI was established? Come on, I had told you already. What was the year? That year was 1988, right? When the SEBI was established. But if I'm asking you about the year in which the SEBI got the statutory title, then what was that year in which the SEBI became a statutory body? That year was the year of 1992, right? So these are the two things we have to be revised, okay. So this is the topic we are going to cover, and this is the little bit revision we need to cover required, or we need to require, basically you can say, okay. So let's start. So if we talk about the introduction of the SEBI, this is the introduction part. So the Securities and Exchange Board of India, SEBI, is the regulatory authority responsible for overseeing the securities market in India. It was established on April 12, 1992 as an independent statutory body under the SEBI Act 1992. Okay, please correct it. It was not established in the 1992. This is the common mistake oftenly made by various students. That's why I have put it here. Okay, so that when you see this, so you will also believe that it was established in the year of 1992. And that's why I had just remind you in the starting that it was not established in the 1992. It was established in the year of 1988. Okay, as the auxiliary to Reserve Bank of India for the shares and the securities market. All right. But it was the year of 1992 when it was become the statutory body. Okay. By passing of the SEBI Act 1992. Okay, so please correct this particular dilemma. Okay, it was not established in the 1992 but was became a statutory body. Okay, so please maintain this clarification. All right. SEBI plays a crucial role in protecting the investors' interest, promoting fair and transparent securities market, and ensuring the orderly function of the capital market in India. Okay, so basically, if we talk about the capital market, if we talk about the capital market, then what is the meaning of capital market? Let's first have a discussion over it, then we will proceed further. Okay, what do you mean by the capital market? In capital market, there is also a buying and selling like any other market. Let me write down again. Like the any other market, in the capital market, there is also a activity of buying and selling. Okay, so you may ask me what they are buying and what they are selling them. So please remember there is no regular goods are being sold in the capital market. Okay, there is basically the selling of the rights and the ownership. Okay, or you can say in a general language we can say those who having money provides it to those who requires money. Okay, in promise of particular benefit. Okay, so these are the two little things about the capital market. The first thing, like the any other market, they are also having the buying and selling activities. Second is that no regular goods are being sold in the capital market, but there is a exchange of the money. Those who having the access giving the money to those who requires it. Okay, that's why it's known as the capital and market. Okay, so we can say, suppose this is the company XYZ. Okay, the XYZ basically launches the 10 shares at rupees 1 lakh each. 10 shares 1 lakh, it means XYZ total require rupees 10 lakhs. Okay, so this is the one who requires a money. All right. Secondly, there is the two people. Suppose there is the two people who buy these shares at 5 shares each. Please pay attention there. Okay, 5 shares each. It means that they both have to pay rupees 5 lakhs each. Okay, so in this example, XYZ is the required one who requires the money, whereas those two peoples are the givers. Okay, so here XYZ sells the shares and these two people buys the share. So we can say this is the activity of buying and selling. Okay, those who having the access are giving the money to those who requires it. But in the definition, I had mentioned a word in promise of particular benefit. It means that if these two peoples are giving the money to XYZ by purchasing their shares, so it means that these two peoples required a particular benefit from the XYZ, which is oftenly in form of the dividend or profit share. Okay, it means that Suppose the XYZ invested the money in some way or utilized this money. Okay. And then they had got the profit of rupees 1 lakh. Okay. So they have to share certain percentage of this 1 lakh with these two people as per the agreement, which was signed during the buying and selling of the shares. Okay. So let's just simplify it. Suppose XYZ launches the 10 shares for rupees 1 lakh each. Okay, in the market, and XYZ said those who will get the shares will get 10% of earned profit. Means whatsoever the profit will be earned by the XYZ, the shareholders will get the 10% of it. Okay. So here, if we go by this thing, okay, then this is the particular promise. Okay. So when these two people buy the shares, okay, so they become entitled for this 10% of the profit sharing. Okay. It is the entitlement. Second is this 10% means rupees 10,000 because the earning profit was 1 lakh. Okay. It means their share will be rupees 10,000 out of this 1 lakh. Okay. This 10,000 will be distributed amongst them or distributed between them as per their share percentage. Like how much shares they are holding from the number of shares issued. If we go by this example, then total 10 shares was issued and 5 shares were purchased by both of them. It means they are holding the 50% shares. Okay. So in such a scenario, this 10,000 will be distributed equally so that they both will get rupees 5,000 each. Okay. So this is the first scenario. Second, suppose if instead of buying the 5 shares each, there is a change, and this change leads to the condition that one person who is Mr. A and another person is Mr. B. Okay. Mr. A has purchased the 7 shares. Mr. B has purchased the 3 shares. The same amount has been provided to the XYZ, but their ratio is getting different. Okay. Right now, they having the share ratio of 70%, ratio 30%. Okay. Because these 10 shares were the 100% shares issued. Amongst these 10 shares, 7 occupied by the another, 3 occupied by the another. It means 70 to 30 ratio. So if we divide the 10,000 as per this ratio, so one person will get 7,000, 70% of 10,000, and another will be entitled to 3,000. Okay. So Mr. A will get 7,000 and Mr. B will get 3,000. So this is the condition of the shareholding. All right. But the another question which should come in our mind after clarify the capital market should be that why they are called the securities. Why they are called the securities? Because these are secured and particular benefit promised on it. Okay, they are secured means suppose if Mr. A and Mr. B, they both had provided the rupees 10 lakhs to company XYZ. So XYZ is liable to pay this amount to them. Okay, it means the XYZ is now become a obligatory. okay, to either pay the amount back to them or provided them the particular interest as per the share agreement. That's why they are called the secured ways, and that's why they are called the securities. Okay, suppose in order that the XYZ fails and the XYZ becomes the bankrupt. Even in such kind of situation, all the properties of the XYZ will be sold out or auctioned, and the remaining money will be distributed as per the share of Mr. A and Mr. B to them. It means, suppose if rupees 60 lakhs recovered after sold out the XYZ. Okay. So out of these 60 lakhs, the 10 lakhs will be given to the Mr. A and the Mr. B because they had provided the 10 lakhs investment in the company. Okay. So that's why they are called the securities market. Now become the picture a little bit clear. Okay. So the SEBI is an organization which provides a role in the protecting investors' interests, promoting the fair and the transparent security markets. Okay. It means that they have to ensure that this buying and selling of the shares or the securities should be done in a transparent and the fair way. Okay. So let's move forward. SEBI is the primary regulatory authority for the securities market in India. It operates under the Ministry of Finance, the Government of India, and has its headquarters in the Mumbai. Okay. So basically, if we talk about the stock exchange or the share market or the stock exchange, share market or securities market. If we talk about them, all of these, because all of these are similar, okay, controlled by only one body called as Securities and Exchange Board of India. Okay, and under which ministry it works? It works under the Ministry of Finance. Where it's having the headquarters? It's having the headquarters in Mumbai. All right. Thereafter, if we talk about the objectives, first is the investors' protection. SEBI ensures that the investors receive accurate and timely information about the securities and the companies issuing them. This includes financial statements, risk and performance data. Okay. The first thing is that, suppose if we talk about the accurate and timely information. All right. Suppose these are the investors in the market, or these are the people who having the access money of the market. This is the company XYZ. Okay. The XYZ launch a shares. Okay. And the information enumerated in shares is different for Mr. A, for Mr. B, and for Mr. C. Okay. So suppose Mr. A was getting 10% interest on the same share. Mr. B is entitled for 20% and Mr. C is entitled for 5%. Okay. In this scenario, if we examine or evaluate the situation, then we will find out that all of these three were the investors, but Mr. B is getting more than Mr. A and Mr. C, which is unethical. Okay. That's why it is prescribed that the timely and the accurate information must be issued. It means that information provided to ABC must be accurate or must be same. Okay. So if B is getting 20%, the same should be promised to the A and the same should be promised to the C. Okay. It regulates and monitors entities in the security market to prevent fraud and protect investors from unfair trade practices. SEBI enforces rules that ensure fair treatment for all investors, including measures to prevent price manipulation and insider trading. All right. Same treatment as we have discussed the XYZ, which launches the IPO or launches the shares, basically not IPO, to shares, Mr. A for Mr. B. Okay. They both had provided rupees 5 lakhs each. It means total money has been provided to the XYZ must be rupees 10 lakhs. Okay, but XYZ favors Mr. A and said, we will give you 20%. Okay, and not favors Mr. B and said, we will give you 10%. All right, so rupees 30,000 is the total amount which is to be distributed between the Mr. A and the Mr. B. Okay, so Mr. A is getting the 20% of it. Okay, so means rupees 6,000 will be the amount receiving by the A and rupees 3,000 will be the amount receiving by the B. They both had provided the same amount. They both had purchased the same shares, but due to the favorism and the unfair or unequal treatment to the shareholders, Mr. B is in the loss and Mr. A is in the benefit. Okay, so CB denies this kind of things. It means if Mr. A is promised to receive the 20%, so does the Mr. B would be. All right, this is the investors protection. Second one is the regulation of the security market. Okay, SEBI regulates and supervises various entities including the stock exchange, brokers, sub-brokers and depository participants to ensure that they comply with regulations and operate fairly. Okay, they are not misleading the information, they are not misguiding the person. Okay, they are not playing with someone for their own benefit. All these kind of things are being watched by the SEBI. It prescribes rules and regulations for market intermediaries, promoting their accountability and ethical conduct. All right. The authority also ensures that the market infrastructure, such as trading systems and clearing settlement process, is efficient and reliable. All right. It means that suppose if someone has purchased a share or participated in market or stock market, you can say. Okay, or we can say we having the company XYZ which had launched the 10 shares at rupees 1 lakhs each. It means they are entitled to get rupees 10 lakhs. Okay, in both the scenarios, if the settlement and the payment system is not capable, so this person will be delayed to get the ownership on shares because he has purchased the share, no doubt, but due to the payment issue, he is not getting the ownership. Similar thing will be happen with the XYZ. If the XYZ has sold out the shares but not received the money from the settlement procedure, it means that they had provided the ownership, they had maintained or they had established the responsibility to the stockholders, but they are not getting the money so that they could utilize it for the future. Okay, this is the issue, or we can understand it by the example. Suppose the share was sold out in the January. Okay, and the XYZ promised that they will give the 35% of earned profit to the shareholders. That was their commitment. Okay, but due to the slow process of the payment and the settlement, the XYZ is not able to getting the amount of rupees 10 lakhs. Okay, but the 10 shareholders had already provided rupees 1 lakh to the stock market, but it is delaying because of the slow process. Okay, so these players or these stakeholders who had purchased the shares, okay, they will claim their 35% of earned profit in the ending of the January, because from their side the money has been given, but XYZ didn't receive the money, so that's why they would not be able to invest this money into somewhere. Okay, so this is some kind of chaos could be created if the system is not efficient. All right, so for this we can say SEBI has to check out on these things also. Thereafter, prevent the insider trading. SEBI enforce stringent regulation to prevent insider trading, prohibits companies insiders from trading on the basis of non-public, price-sensitive information. It requires companies to disclose information promptly to avoid any information asymmetry and to protect the interests of the retail investors. Okay, suppose there are two investors. One is Mr. A, another one is Mr. B. We have the two investors. Okay, Mr. A is a large investors. Mr. B is having the retail investors. Okay, but they both are the investor. Okay, so as per the principle of the SEBI will try to give the equal treatment to both of them. Equal treatment to both of them. All right, but Mr. A, being a large investor, has provided the money to someone inside the company's management. Inside company's management to leak the sensitive information. Because if you remember, I had told you, if this is a company XYZ, so they will not share each and every information to the people. Okay, they keeps information away from the people, which is known as the secret information or known as the confidential information. It may be about the company's reserves, company's secondary capital, and whatsoever. Okay, so Mr. A has provided the money to someone, suppose Mr. C. Okay, so Mr. C has provided this secret information to Mr. A. So Mr. A could go through this particular information and would take the decision as per the information has been shared to him. Whereas Mr. B, who is also investing in the XYZ, but he is not so capable to provide the money to Mr. C. So that's why he will be only able to getting the information from the XYZ. Okay, or that will be the common information which is being provided to all the shareholders and the stockholders. So this will create the inequality because someone is getting the accurate and even the secret information, so that he is much more capable of making decision than the others. Okay, so for these things, this term is known as the insider trading. It means leaking of the company's secret information to the outsider. So this thing is being restricted by the SEBI because SEBI tries to provide the equal treatment to all of the people. All right. Now let's move forward. Thereafter, we have the promotion of fair practices. SEBI promotes a level playing field in the securities market where all participants adhere to ethical and the transparent practices, which leads to the equal chances and treatments to all players. Okay. All right. It sets standards and code of conducts for market intermediaries, preventing market manipulation and fraud. By regulating authorities like short selling and margin trading, it maintains the market integrities. Okay. Thereafter, development of the securities market. SEBI plays a pivotal role in developing the securities market by introducing new financial instruments, trading platforms, and the technologies. As we had discussed already, that the market is always dynamic, right? Each and every year, even after every month, there is a new technology which has been introduced in the market. Okay, and this technology could be used for both bad or worst. Sorry, bad or good. Okay. So if the technology has been implemented by the SEBI, so the SEBI will try to use it in a good way. But if the same technology would be utilized or would be introduced in the market by someone, then they will try to use it for own benefit. Okay. And this could bring a loss to all the principles of equality and the fairness and the transparency. Okay. That's why the CB tries to handle or establish the new technology for not only the benefit of the market but also ensure that the new technology should be stayed in the right hands. Okay. Okay. Similarly, they also innovate, they also innovate the existing technologies. Existing technologies. Okay. As per the as per need of time. Second, also to prevent fraud. Okay. Because suppose if someone has become habitual to some practice, okay, it means that that particular person knows each and everything about that particular practice and he can even use it for misleading. Okay. That's why SEBI always try to find out the new ways to make the changes and that particular practice, so that if someone is planning to make some changes and fraud the authorities or the stakeholders, if CB introduced a new innovation and the new things in the already existing things, with that it will prevent that person to make some negative changes or use it in a negative way. Okay. That's why it is necessary. It encourages information like the exchange traded funds, real estate investment trust to diversify investment options and attract more investors. Okay. So suppose if there are three types of funds, XYZ, ABC, and DEF. There are three types of funds. Okay. And we have the investors. We have the investors who having the money but who do not want to invest in these kind of funds. Okay. It means that they could invest a lot of money in the market and could improve the situation, but they're not getting the option as per their wish. Okay. So that's why the SEBI will try to figure it out what these investors wanted, and then they will formulate a customized fund for their, so that they could invest it and ultimately the share market will be grown up. Okay. So suppose after the examination, they had introduced a new fund called the GHI or the new fund called MNO. Okay. So these investors who were not interested in these particular funds will invest in these funds because that has been or debts have been introduced as per the need of these investors. Okay. SEBI promotes market development in terms of geographical reach, market depth, and investors' participation. Okay. Fourth, thereafter, we have the regulation of the mutual funds. SEBI regulates the mutual fund industry to protect their interests of investors by ensuring that the mutual funds are managed professionally and transparently. Okay. So what generally happen in the mutual fund? Suppose these are the 10 people. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. These 10 people invested rupees 10 lakhs in a fund which is being managed by the proprietary desk. operator. Okay, and we assume that rupees 1 lakh each has been provided by all these 10 people. Okay, then only the amount becomes rupees 10 lakh. Then this property tax operator, on behalf of these 10 people, will invest it in some company or any other business. Okay, suppose had invested in the XYZ. Okay, and the remaining profit which will be earned by investing this amount, some commission will be gone to the property tax operator, and the remaining profit amount will be distributed in these 10 people as per their share in the total money, in which it is 10% each. So this is the mini working, or this is a mini explanation of the mutual funds. All right. So here you can say these 10 people have invested their money on confidence of this property tax operator. Okay. So that's why the SEBI tries to ensure that the mutual fund operator or the property tax operator who is handling the amount accumulated by the deposition by the mutual fund stakeholders. Okay, so that operator must be efficient to invest this amount in a good company. Okay, suppose he had invested this amount into the company of ABC. Okay, invested rupees 10 lakhs, but they had suffered a loss or a huge loss. Okay, so this loss will be beared by these 10 peoples. Okay, because they had invested their money, right? That's why the SEBI tries that, because in the mutual funds there are many people who got involved, so it is to be ensured that this money or this amount or this fund, you can say anything, you can say, has been managing by the professional person who could manage the things at the best. Okay, it enforces for the registration and operation of mutual funds, setting guidelines for fund managers, portfolio disclosure, and the valuation practices. Okay, so basically any property tax operator or any stakeholders who is participating in the mutual funds, they all are obligated to these particular areas as per the requirements of the SEBI. Okay, thereafter, regulation of takeovers. SEBI regulates takeovers and mergers to ensure that these transactions are conducted in a transparent and equitable manner, safeguarding the interest of the minority shareholders. Okay, it sets forth regulation on disclosures, often offers and pricing methods for the takeovers. So suppose if we have the company A and we have the company B. Okay, so as per the requirements, if the company A is planning to take over the company B and the company B is planning to give their company to A. Okay, so in both the scenarios, both company A and company B is required to disclose this information with their stakeholders. Okay, even they are minority ones, because they have invested in the companies, they will get affected by the decision taken by the company, whether to acquire it or whether to be submissive. Okay, that's why it is very much required that both A and B should disclose the reason and all the related information with the shareholders. Okay, thereafter, promotion of research and education. SEBI promotes investors' education through awareness campaigns and collaboration with the various institutions. Okay, so that any person who is invested the money in the share market must be able to conclude the decision on the basis of knowledge. Okay, if the person do not possess a particular knowledge, then he will be suffering a loss because he is not making a right decisions. It encourages research and analysis in the field of securities market to improve the understanding of investors and the market participants. All right. Thereafter, we have the regulation of intermediaries. SEBI regulates various intermediaries such as stockbrokers, merchant bankers, and credit rating agencies to ensure that they meet the required standards and maintain the market integrity. Okay, so suppose, just an example, this is the person who is the investor. This is the company which we call the XYZ. Okay, and XYZ hire a middleman we call Mr. B. Investor is Mr. A. Okay, so Mr. B is a middleman. Okay, which has been hired by the XYZ. So Mr. B will try to convince the Mr. A to invest in the XYZ. Okay, so SEBI ensures that Mr. B, who is the intermediary, he may be the broker, the sub-broker, maybe the credit agency, he is providing the actual information to Mr. A or not. Suppose Mr. B claim that the XYZ is making the profit of 100 crores every year. This is the impressive amount. Okay, so might be Mr. A will become agree to invest in the XYZ. Okay, but in reality, the XYZ is suffering the loss of 50 crores every year. Okay, so in such a scenario, when the Mr. A will invest the money in the XYZ in hope that he will get a share of rupees 100 crores. Okay, but in reality, he will have to bear the loss of rupees 50 crores or the percentage in the rupees 50 crores. Okay, that's why the SEBI declares this thing as a fraud or the false promise or the misinterpreted information. Got it? So, SEBI ensures this kind of regulation. It establishes eligibility criteria, codes of conduct, enforcement mechanism for these intermediaries so that the SEBI could track them easily whatsoever they are doing. Okay. Thereafter, we have the prevention of unfair trade practices. SEBI regulates aim to prevent unfair trade practices such as price manipulation, front running, and market rigging. The authorities conducts investigation and takes enforcement actions against those involved in such practices. All right. International cooperation. SEBI collaborates with international regulatory bodies and exchange to promote international best practices and harmonize regulatory standards. Because not only the domestic investors but also the foreign investors are investing in the India. Okay, this cooperation helps in creating a more seamless global investment environment and enhances the credibility of the Indian security market. SEBI's multifaceted objectives contribute to the integrity, transparency, and the fairness of India's security markets, ultimately fostering investors' confidence and the market development. Because when the investors get to know that their rights are being protected by a regulatory authority or an apex body, so they will be encouraged to invest freely and more precisely. Okay, so students, in this lecture we had started the SEBI part and we have discussed some parts. Okay, in the next lecture we will continue with the same topic. Till then, just revise the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.